Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your agriculture update for this Thursday, and we're now at the 26th of April, 2018, time about 1:40 p.m. Central Daylight Time. Another day where the dollar right onto the upside, although we are seeing some moderation in the bonds and notes because they've rallied back a little bit just recently, and that puts what? Whenever you get the bonds and notes going up on the futures, it means real rates slipping back a little bit. We have the wheat market giving back a chunk of the gain that it made yesterday, pretty close to unchanged in the soybean market. And corn, just like yesterday, either side of not doing too much one way or the other. Remember, the planting progress reports are going to start going crazy as the farmers are all out in the fields and they have those machines. If they've got a sixth gear, they're in it and they're running down that field. When we take a look at a weekly area chart of closes, beans are pretty neutral. You're down 3/4 of a cent for the week, so that's not much there. You've got a market that's in what we'll call a down thrust, all because you got a higher high and a lower low on a closing basis. You're still over the 18-week moving average of closes, which means the market as a whole should have a generally friendly bias. Whenever a market's over an 18-week average on a weekly chart, I say it's upside bias, under a downside bias. When we take a look at a just plain daily bar chart, you can see the correction that is set in. And when we put on the swing lines, you get to see these peaks and valleys. Notice the valleys here and the peaks. What you're looking for out of the study of a swing line is to be able to take a chart and quickly look and say, okay, it's trending. Let's define a downtrend. Lower highs, lower lows. Bingo. Come back this way, it's trending, but you can't see those peaks and valleys. That's what it does. It tells you something else. If the market rallies, the number that should not be taken out to keep the formation in place is 1063 3/4. So from here, it's about 24 cents away. I then apply moving averages. Now, one of the averages I like to use on beans is the 100-day moving average of closes. It's a longer-term average. The one that's going to give you more play, and I think more important, is the 18-day. And just like I do on the 18 on a weekly chart, when you're under the market, I say it's downside bias. It also offers, if the prices are under it, a resistance point, which is 1048.5. From here to get over 1063 3/4, you have to have a 15-cent rally. Let's assume that occurred. Would that turn the market bullish? And the answer would be under the current formation, no. You'd end up with what we have here, the lower low, and then a higher high if you took that out. That's not a trend. When I look at Bollinger Bands, what I'm looking for right off the bat, support and resistance points on a market. What a market will do is it will trade 95% of the time within a Bollinger Band. That's how the algorithm's designed. I then look at what shape has it taken. Is it wide like this one? Is it narrow? Is it going sideways or moving up or moving down? In this case, it's wide, a bit too wide. You've got about a 50-cent range in there. Generally, out of trends come narrower ranges, not one that's about 50 cents in size. In the soybean, I always look at, too, momentum. And the slow stochastics, I think you'd agree, are pointing down. You see the numbers there. As long as the numbers don't get under 30, they're not oversold. So what we have here is the market getting a bounce, alleviating some of the down pressure on the market. Resistance 1048.5, support back at 1026 to 1024 3/4, and to keep control of the bears, you can't get over 1063 3/4. Now the meal, if you just visually look at it, look at how much narrower you're getting into the Bollinger Bands. See how close that they're getting to each other? And when you look at where they're coming from, well, 50 cents in beans is $2,500. Believe it or not, 374 to 393 is about 1,900. Not that far away, just a tighter band. That's all that it means to me. Are we trending in this market? We are not. You have a pattern of a lower low, and yesterday you made the higher high. And when you come from a low, often that 18-day average of closes will act as resistance. When you come from a high, it often acts as support. And from there, trends like to set up. Momentum now correcting to the upside. Both numbers now over 30. Any reading under 30 is oversold, so we have a market that is no longer in oversold condition. Can it just turn bullish in terms of higher highs and higher lows? No. You've still got the lower low, the higher high. Doesn't mean it can't move up. Problem is it's not trending. It's a sideways market. The big bear market has been soybean oil. Notice how it's riding this lower band and how the lower band started out sideways, and then, remember what I said, it starts taking an arc one way or the other. The beauty of this particular trend has been that instead of the market plunging under it, it has just ridden it, which is often, not always, but often accompanied when you get the slow stochastic study converting from oversold to locking in a trend, or embedding as I've termed it. And what that means is the two numbers that make it up get under the 20 level, start going sideways and stay that way. Until the red line gets over 20, I say that rallies in the market will still be sold. When we come on to, let me get to the next chart here, the corn market. Same concept. Here's a market, if I could, here it's down. If the market's going to rally, I look for resistance potentially to show up at the 18-day average of closes. When the market was above it, I'm going to look for the battleground there if it breaks back. So right now what I'd be looking for is to come up. This was the 24th. This is yesterday, and notice how you're just now fighting that battle. Interesting. Now, this market could turn bullish. Take out 396, and what you'd have then is higher lows, higher highs, putting the 401 level into play potentially on the upside. In the wheat market, you got away from that 18-day average yesterday. See how it just jumped? Today it comes back to check it out. Often that's the case. That's what I'm trying to show you. And if you don't put these on charts, you don't get to see how things play around with them. Obviously, when you're charting or trading, you're trying to catch moves based on this. What we did see is that the 100-day average of closes offered one support level. You shot back up over the 18 and you're back into here. Admittedly, no trend. You have a lower low and a higher high. Momentum's also flat. I don't see anything there. Sugar market. Sugar market snuck out something today that I always pay attention to. I want you to look at the finish, and the number came over 20. Now, if we go back on that, these numbers were all under that 20 level. Often, price momentum will lead actual price. And in this case, the momentum is no longer embedded. Therefore, the warning sign now, if I were in the bear camp here, I'm thinking prices are going back for the 18-day average of closes, and it's what I'd call get me out of Dodge. I don't want to be in that market. Doesn't mean I'm right in my analysis. You are in a downtrend, but that's a big-time warning signal. In the coffee market, this market's holding on, trying to establish more upside. You've got the pattern of higher lows, certainly higher highs. The battleground for now, 3 days running, what's today's low? 118.80. 3 days, it was the past three. Just missed hitting that 18-day average today. But as it's working itself up, one of the things that's happening is it's spending its power. Any reading over 70 I consider overbought. So you're getting close to that. I'm looking for now if the market can continue up to go to 120, 160. The trend gets destroyed if you take out 117.55, and that would put into play the 115.90 level. So an interesting chart. Where's the cocoa keep failing? I want you to look at the Bollinger Band numbers. You get up to them, and that's your failure zone. Momentum, you're running out of the momentum here. Outside day down. My rule of thumb, it would take in the next 2 days, either day, getting over today's high to start another leg. If that doesn't occur, the odds favor that the market put in a trading top just now, and the question is it going to set back to the 18-day average to fight a battle there? The trend is up, but I think the smart money got out today. In the cotton market, went up, challenged the upper Bollinger Band and running out of momentum. See that sideways action? Pay attention to that sideways action. From it, we'll develop a trend. It could be to the upside. I don't care. You're over the 100-day average. You're over the 18. Why not? But momentum right now has been dropping back on you, getting under the 70 level, as you got to get it to the point where any reading over 70 is overbought. It's now worked its way to the point where it's not. The question is, does it have enough power to get anything else? And I would doubt it right here. In the cattle market, big outside day down. So now what you have is a market that got to the upper Bollinger Band, failed 2 days ago, working its way back to that 18-day average to figure out what next. Momentum turning down with it. I'm going to call the chart neutral. August feeder cattle. The market is still very much in an uptrend. However, you can see the green line and you see the upper Bollinger Band right here. The two were together, and we'll take them and show you. Here's the two together. You've got a market that's running. Where are you looking for resistance? I'm looking for the 100-day average and the Bollinger Band to team up because they are together and try to stop this market. They went there, the market came back to challenge, and it's still failing against that number. So assuming one were bullish, if that were the case, you're looking for that. If one's bearish and you sell over all these numbers, well, that's the spot that you're bearish. It's not the way I teach charting, I promise you. When I'm over that 18-day average, I'm only looking to be a buyer, under it only a seller. In the hogs, you peaked out against the Bollinger Band, fell back to the 18-day average, checked it out yesterday, couldn't do much with it, slipping back a little further here. This is what you call one of those vertical declines. Very difficult to trade when that happens. You've gone basically, if you look at it from, what was the peak here? The exact peak was 79.10, and all of a sudden you're down to 73, 77. It's hard to catch when it's just a straight line down. So you put it together, you try to come up with a game plan, and I try to help you with that. One of the things that I do is I write a lot of research during the days, but the real nitty-gritty is in my morning video that you need a user ID and password to get into. I cover 40 charts. In those charts, and I cover them a certain way, I will start you off with the financials, all the stock indices, then we're going to move on to the currencies, then we're going to move on to the interest rates, the metal markets, the meats, the grains. We'll end up into the softs, and then all of the energy markets. So you get your hands full. But the idea there in those tapes, I can give you the actual setup as it's happening, covering, and I'm saying, here's what I think you can do today. Here's a trade for this one. This is a position trade. If the market gets up there, blah, blah, blah. I can't do that in these videos. You have to have a user ID and password to do it. Call my staff. You can go to our website. You'll see a carousel of free offers. This will be in there as one of them to sign up for. My research you can put up here if you haven't tried it before. Also, you can look right up there if you're on YouTube, and underneath us on many websites says, click here for Ira's free information. I'm Ira Epstein. You have a great day, and I'll talk to you all in my next set of videos or tomorrow. Take care.